Hello, today is the 14th of February 2011. Welcome to today's Silver Log. And before we get into today's analysis, this chart is going back to 1968, and it's a comparison of gold, silver, and the Dow. And I've heard sometimes people stating, why is the stock market not doing what silver's doing? They trade together, and maybe over the last couple years, it has done an okay job at trading together. Since 1968, they've actually yielded the same return, as they're pretty much at the exact same spot today. But when you see the Dow Jones having its greatest bull market ever at the same time when silver was having its greatest bear market ever, you know what? They really don't trade together all the time. And you'll hear some people say, well, when the stock market crashes, well, that's just going to bring silver down. And one, there's no guarantee the stock market is going to crash. And two, even if it does, that may mean silver goes down with it, and that keyword is temporarily goes down with it. All right, well, moving on, we're now going to talk about today's action. On Friday, I was talking about this 5-day moving average in coordinates with the trend line, and it was successful support, as this little trend line, or this channel that we were in, this trend line has obviously been broken. The trend we've been in for the last few weeks is continuing, and we've now made new highs. The previous high of $30.50 has now been taken out to $30.70, and this is as of 11:18 a.m. Eastern time, and it looks like the market's even progressing towards the upside. Now, when you look at this trend line on here, it's I put this in right around here. I put it in. It was a fluke job. It was actually at first supposed to connect this high. So how that happened, I don't know. But I left it as is because I like the way that it's worked within here. But the obvious trend that we're going through right now is not the levels that I have drawn in, but more so this being support, and the resistance would be, let me just draw a complete nice little parallel line. Something in the area like that. That would be the more accurate one than this one in here. Now, the reason why I chose this in here was it's the exact same rate of ascent the trend line was back in August and September and October and November. It's also the same rate of decline that we had before on the last downtrend, and the distance from here to here was the same as the one that was drawn in from the downtrend line. So it was more of an automated one, but we are right now continuing the trend towards the upside, and it does look as if we're going to go towards the 3128 level for a test. And I say this based on the Fibonacci, as the resistance that we had before was up at the 3128 right in here. And I talked about the Fibonacci from this high and this low. And the key Fibonacci, the 61.8, roughly around 29 and 1/3, was taken down. Let me draw a line at that level, which happens to match November highs. And we had a nice breakout, and the candles in here that followed the big day was showing consolidation of the big gain. That's what we had as a 3-candle consolidation. It's now breaking this, and most likely will end up going even higher before the end of Monday comes to a close. But very, very successful day thus far. This was more of like that of a bull flag. Markets correct either through time or through price. So after it had this nice gain, It corrected through time for 3 days, and it looks like it's going to continue its trend now towards the upside. When it gets up towards this 31.40 level, which I said 28, and I say 28 because it's the exact high in here, and 40 because that's the Fibonacci level that I've been talking about for what seems like an eternity now. And because we will go up there for a second time, that would increase the chances of taking it out. And if it does take it out, then it's really anybody's game from there to where it will be heading towards. It seems as if the next key levels are between 34 and 36, but at the same point also I realize that there's a good chance when things really go wild and crazy, it's going to be hard for people to get into silver because they're not going to have as much time. Just like in a day trading scenario, the ones whom are fastest, most accurate, as with the speed that is, are going to succeed. And the same thing could be true here, as the opportunities or when you see movements where you have candles or days gaining 8, 9, 10, 11, 12%, then that's going to be hard for people to try to time the market. Not saying for sure that's going to happen, but the probability odds do look as if that would be coming on a break of the 31.5 level. Thank you for watching and have yourself a great day. Bye-bye.